We are looking for the next Fed rate announcement this afternoon. And of course, as ever, investors will be trying to figure out what is the Fed's game plan here with Trump's tariffs threatening disruption to the economy. Let's bring in Blake Gwinn, head of U.S. rate strategy at RBC Capital Markets. Thanks very much for joining us. Never an easy job being a central banker. You're whack-a-moling all the time, but the perception seems to be that Jay Powell and his colleagues will stand pat on rates right now.
Oh, for sure. They're in wait-and-see mode right now. You mentioned what is their game plan. I think their game plan is that they don't have a game plan right now. They're kind of waiting to see which way the data breaks. They know that these tariffs are going to have impacts. I think we also know, just looking at the data, we haven't really seen those impacts showing up yet. So they really just have to wait and see. I think they're looking for the timing of how the impacts hit, inflation relative to growth in labor. My view is inflation probably hits a little bit more quickly than the growth in labor, and also the magnitude, how much it's actually going to drag on growth. But for right now, they don't know those things. So I think they're just kind of waiting to see what the data does. We did hear from Powell a couple weeks before the meeting. This was just about 3 weeks ago. He spoke right before the blackout period. He said they're in a good spot to wait for more clarity. And I don't think anything we've heard over the last 3 weeks on the data front has probably given them that clarity that they need to take action.
The president, U.S. President Donald Trump, saying on the weekend, Powell just doesn't like me because I think he's a total stiff. But he has toned down any claims that he was going to fire Powell because Powell's term ends next spring.
Well, to be clear, there's two terms. He has a term as the chair, and then he also has a term on the board.
Okay.
His term on the chair as chair actually does end. But, even though it is traditional, I would say for the Fed chair to step down from the board as well once their term is over, that doesn't necessarily have to be the case. So we could actually end up in a situation where he is no longer the chair, but he does stay on the board of governors and continues to be a member of the Fed. Mm-hmm. If that's the case, then Trump really only has one chance to kind of naturally replace Powell with somebody that's not already sitting on the FOMC, and that's with Kugler, whose term will also be up early next year. So he will have that seat to fill. If he doesn't want to choose a new Fed chair from the people who are already on the board, that may be his one chance to put somebody in to replace Powell that's not already currently on the committee.
Broadly speaking, I mean, inflation is well down from 2022, and that's after the Fed rapidly raised interest rates. It has cut them since. Is inflation more or less under control in the United States? I know all bets could be off with the tariffs.
Yeah, and the tariff impact, I mean, obviously that's remains to be seen. But I will say that even before the tariffs, I wouldn't call the inflation situation fantastic. We had kind of flatlined above 2.6 on core PCE, which we know is the Fed's favored measure. We've been kind of flatlined since, last June. And so, I think we'd kind of stagnated at a place that, yes, has a two handle, but I don't think a level that the Fed could really sit back and kind of say job well done. So even before we start layering in tariff effects, I don't think we were, necessarily mission accomplished on the inflation side yet. And now the impacts from the tariff, the real question is going to be whether that is kind of a one-time price level increase that eventually rolls out of a window, i.e. transitory. That seems to be the tact that Waller is kind of expecting, or whether it starts to spill into other forms of increases. So it's not just the direct flow through of tariff, costs to the consumer, but it actually is starting to hit other products. It's starting to see inflation expectations become unmoored. That's what the Fed is really concerned about, and that's why they're staying pat. And I think that's what keeps them from being more reactive or more proactive, I should say, to the potential downside risk to labor and growth that could be coming from the tariffs as well.
I suppose we should remember that uncertainty is itself economically damaging. I see that Associated Press is quoting the chief U.S. economist at Oxford Economics that this uncertainty gives them, quote, night terrors. It's suffocating. Businesses that don't know the rules of the road, their knee-jerk reaction is to sit in their hands, aka not invest.
Oh, absolutely. This is a theme that I have really been stressing. I think there's a tendency in kind of my seat, for economists, for strategists, to kind of do the bean counting part of it, to say, well, if we assume an effective tariff rate of X and we apply that to, all the import-driven consumption that we see, it means Y. But there's this really kind of softer piece of it, which is not just what is the tariff itself going to do, but what is all the uncertainty, like the kind of chaotic nature with which not just the tariffs have been applied, but I would also say, a lot of the Doge things that happened, a lot of the uncertainty and the chaos, I think, makes it very difficult for businesses, and I would say consumers as well. They like certainty. They like stability. If there are going to be changes, they like for those to be easily digested, well telegraphed. Kind of easy to understand. And I think the fact that we don't have that, it's tough to imagine businesses over this next 6 months to a year expanding or signing new leases or building new factories or hiring new people, because you really don't know what the landscape, as you said, the rules of the road, you don't really know what they're going to look like for the next year. So I think businesses are in kind of a deer in headlights mode right now, just trying to figure out what things look like. And when you're in that mode, you're not going to be undertaking a lot of that stuff that's going to drive economic activity.
So when do you think the Fed is likely to cut again? I know that's very hard because we don't know what the damage from the tariffs will be, but will they wait months, do you think? I know you've already touched on this.
Yeah, I have September as the first cut. And that timing, again, I think it's kind of this mismatch between how quickly the inflation impacts show up relative to the downside risk to growth, the downside risk to labor markets. That uncertainty that we were just talking about on the business side, I do think that prevents them also from taking more permanent actions in response to the tariffs. If I think I'm going to need to shut down store locations, or if I think I need to lay people off to accomplish cost reductions because of the impact that tariffs are having on the bottom line, I don't think businesses are doing that right away. I think they're still trying to just figure out what the scenario is going to look like, if there's going to be exemptions, if there's going to be rollbacks. They don't really know. So I don't think they've taken those more permanent actions yet. Meanwhile, on the pricing side, I think that's going to show up a lot more quickly. They're going to be very quick to pass through costs to end prices. And so you're going to get that inflation impact first. And then over time, as those price level increases start to kind of taper off, and then you start to see the accumulated impacts of, layoffs, closures of locations, decline in retail sales, those kind of things. Those are going to start to build over the next 2, 3, 4 months. And that's why we don't really see the Fed being more confident that the inflation side is contained or transitory and getting more worried about the downside risk until September of this year.
Blake, thank you very much indeed. Blake Gwinn, head of U.S. rate strategy at RBC Capital Markets. Coming up, we got some